Okay, I'm going to go over the charts in preparation for next week. The timing is in the description box. Now, finally, we got some reversal action on the US dollar, but I will actually start with Bitcoin as this market is open on the weekends. Now, updating what I mentioned as one of two possibilities. The preferred possibility at this stage, though there's no evidence for it as the upside is holding, is that this will turn into a larger flat for wave 4. Partly because I'm viewing this on a lower time frame as only a 3-wave advance, and so far the entire sequence is 3 waves up, so it is in this region for an expanded flat that it will reverse, and we should see action over the next couple of days if that's going to occur, and a reversal back towards 2000 or lower. That's the preferred view. The alternative view is that it's simply going to remain bullish, and there's the upward fib extension target of about 4,800 in this market, which I went over 1 or 2 weeks ago, I think 2 weeks ago. I added the flat view because this looks like 3 waves, and that will see the larger, that will see this overall turn into a larger 3-wave move back towards 2000 or 1800 or so for a bigger wave 4, and then a bigger bullish move after that. That is how I'm looking at it right now, unless this segment morphs into some kind of ending diagonal, for example, for larger wave 5, and then we're done and it turns over. I'm at the time only running the 2 views, ultimately a bullish view towards 4,800 or a flat for larger wave 4. Now, if this does morph to an ending diagonal, I will adjust, and then I will consider this segment as 5 and then a big decline, like a massive reversal. But there's no evidence for that, so I'm just going to view it bullishly for now as one of 2 scenarios, flat or truly bullish. And we should see it turn, in the next number of hours actually, and start to top out if it's going to for the flat idea. Okay, so the view on, I have not updated the count on this. I put a more detailed count on Euro US dollar, which I'll go over next time, or next. I am viewing this reversal, first of all, there's not really much evidence that there is a reversal. I'm only viewing it as a corrective reversal, if there is one, a corrective pattern against trend, which would be larger wave 4, and to see this turn back over for a new low for wave 5. It's obviously in this horizontal support level, but I feel that judging by, to update the contrarian sentiment figures, we are still in that region for a reversal. And price pattern wise, I can view this as an extension for wave 5 of wave 3. So I'm going to hold it as a corrective advance now to the upside and look for another selling opportunity overall to complete the entire pattern from January for a 5-wave decline. Now, judging this as a temporary move up, I will view the other pairs such as Euro US dollar and the 4 popular ones as corrective moves. Going over the exotic charts, I'm not going to look at them, but the other ones like dollar zloty, dollar forint, dollar Swedish krona, they are still looking very bearish. So it was a good move, I think, to view this more bearishly overall as an extended wave 3, but I'm going to start to look at this now as a corrective pattern for wave 4, larger wave 4. So looking at Euro US dollar, the chart is a bit messy, but as I mentioned, I think on Thursday's video, I am viewing this as a 5th wave extension for wave 3. It's got multiple 5th wave extensions in here. This is wave 5 of wave 3. I redid the count, the markings a little bit down here to make it clearer. 1, 2, 1, 2, 3, 4, 5. Now wave 5 extends here. We have 1, 2, 3, and 4, and then wave 5 of 3 extends, and then the final wave 5 extends as well. That's the view I'm holding. So wave 5 of wave 5 of wave 5 of 3 has extended. So multiple wave 5 extensions, and now if this is the high for wave 3 in here, which completes this segment, 1, 2, 3, 4, and 5, we will see a fourth wave correction. Now how that will materialize, I don't know. It could be sharp, as this took some more time, and this is not, in my opinion, a sharp move. So perhaps we'll see a quite sharp decline, and then another high, which is what I'm going to hold it as, or maybe something else. It could triangulate something else as well. I don't know. Complex corrections can become very complex, but in any case, I'm going to view this only as a corrective move and another high ultimately to follow. Now we may see a situation where the daily stochastics end up resetting, and then we get that fifth wave. The last reset was quite shallow, so I'll be looking for a reset on the daily. Looking at the 4 hour, it did hold the high I was talking about before. Now, I'm going to view it as a series of 3 waves overall, unless I see something more bearish. But for now, I would say that the downside has this on in a corrective manner. There is nothing that I can see that is a major bearish view on this. I do not think the idea of a new low way down here is going to happen. I see this only as a corrective process. So I'm going to work that. And now the weekly 8 EMA will come in next week about low 116s. And that, as you can see in the past, is a supportive measure. And though it will at some time one day in the future be broken because of the very bullish stochastics, there's not much to consider bearishly here. Only, this is not a shooting star. This is a green-headed shooting star. It's only suggesting a correction at the moment. So 1.6 area on the weekly will be about here. So let's see a corrective pattern hold. And so long as Wednesday's high holds, I'm going to view this as a corrective move with an appropriate count of wave 3 here, closing with multiple 5-wave extensions. Okay, pound US dollar is looking more bearish. The wedge within a wedge worked out. This has been a good call on to the upside from down here for the wedge, and a reversal also managed to take place. Now I was joking around about a correction into here, but it is possible, and then a more bullish view. But this area of 130 would need to hold, but I'm not really holding that view. I think we are looking more at a bearish situation here. Now, whether this is wave 4 or leading wave 1 has to be determined because a truncation can be worked here. The decline will inform us, but judging by bearish daily divergence and the weekly close, which is a bearish reversal candle, and the price pattern overall, it's looking like this is done and that the bears will enter this market in a stronger manner than we will see in Euro US dollar, probably. Pound is looking weaker in my view here. So any correction on this, any type of flag can be set up for a sell in this. So far it's just 3 down from the high. Let's see if we get a 5-wave decline and then a correction from there. But even if it holds as just 3 waves, I will be looking at it as part of as an opportunity to sell into. It seems the bears are holding on to this, and we will get an answer soon about 4 or 1 for this whole move. I think there's a very good chance for this to ultimately be just wave, for this to ultimately be wave 1 of a leading diagonal. But we have to wait and see because of the truncated issue. That is only a guess at this moment. You cannot deal with, when there's a truncation, you don't have any printed proof. I had to work this idea last year with US dollar yen. And truncations are only really workable ideas when they're very sharp declines, like exceedingly sharp declines as we had here following Brexit. So in any case, the bears are holding this. Now, Aussie US dollar, like Euro US dollar, I'm going to view this as a correction. I'm still running the same idea that we've had 5 waves into here, and so far the idea has been working. As I mentioned in the last video, there is a corrective channel here. I don't really like this type of looking channel, but it's there at the time, so it can be worked. But I'm looking at more of a correction still in this. That's my preferred view, and I do feel it is open to topping out here, but I do feel that we are still going to see more upside. I think the monthly stocks have not quite got there yet, and I would rather see, for me, a 3-wave move is my preferred view in this. We have a 5-wave move up out of here from the triangle, and that could be it. But at the time, I'm not going to view that as it. I'm going to view it as, view this as a corrective move into here and another high to come. And I like the area towards 8.2, 8.3. But we talked about this in the past. The 50 EMA, as you can see, it is interactive on the price. So, correction, and then deal with it following that. Looking at the COT data, traders are very much committed to the long side in the Australian dollar. No change there. It's edging up above this region. But I want to hold that it is not at a historical high. Traders to the long side are not committed historically high because back in this region in 11 and 12, they were much, much higher, up to 100,000 contracts net to the long side, large traders. So for now, because of the dollar view mostly, I am looking at this higher. So I'm looking for a correction, and if we get a channeling correction, preferably something deeper towards 78, I'll be looking at this for a long move. Now, New Zealand US dollar, so far the 3-wave view on this did hold. You can see how the trend line can work in a situation like this. It's not a tradable idea, but it is something you can watch for. 3-wave move, in my opinion, that's it. And it does offer the possibility that we're looking at a completed move here. I'm not going to hold it as complete. Like with Australian US dollar, I'm going to look at this still to continue up a bit higher, but it is run, also the stochastics look to me like they need to move a bit higher, but it's open to a more bearish view. I'm not going to run that idea, but it's there. Some traders may prefer to take that. Now looking at the COT, commitment is still way up at historical highs, at least over the past decade. Traders are very much committed to this. Now, is this some kind of new trend? Or are we looking at just an anomaly and a high? I don't have an answer to that question. I would continue to run this to the upside, though, overall, for a bit of a bigger correction at all. I feel there's not much trade in this right now. The trade at this juncture is to the downside, though, for a correction, because it's 3 up, and I would suggest that we're going to see a correction in here. So if a bearish flag appears, that will be some information for a correction as well. But because of the dollar view overall, I'm going to hold this as well to the upside overall, possibly with a 3-wave correction like this, If we get wave 4 in the US dollar, a bigger correction here would make sense. And then one more move up overall to create a bigger 3-wave move. So short term to the downside, medium term to the upside. So watch for a bear flag in this. Okay, sticking with the dollar, let's have a look at the metals and oil. I'll start with silver as it offered to me the more bullish view. Now, Robert Ballin, I mentioned him in these videos before and I follow him on Twitter. He wrote an Elliott Wave book many, many years ago, I think in the 80s, but he is more of a, he's an analyst. And I would suggest having a look at, among other things, I would suggest having a look at his Twitter feed. He posted an interesting chart on the metals and oil, and so far it's been working out well. Now I'm bullish on this, I'm bullish on gold, and I'm bullish on oil, but we're looking at some type of correction in here. I do not think we'll be heading back down to a new low underneath the flash crash, but we are getting some kind of correction. Now overall, if we can view this as a bullish wedge, we'll look at this to correct into here and see a bullish move overall. But my view overall hasn't changed. I'm looking at this overall, even with the flash crash, as a 3-wave correction of this. And if a chance appears to buy into it, I'll be looking to do that overall. So far out of this, obviously, it's true, this does look corrective. But let's see, sometimes leading moves do start with a more corrective looking manner. We've all seen that 1,000 times. Let's see if we get some type of bullish flag into here. And gold too. Gold is still hugging that resistance overall, but I would view this as a corrective move again, and I'm going to hold gold bullish overall. It's still in that region, but on a monthly basis, any move down towards 1245, the opening of last month's range, we'll see this. We'll see the bulls. A chance will enter for the bulls. Rather, they often enter at opening prices of previous months. So I'm staying bullish on both metals overall and a weak dollar. And though it's been a bit choppy into here, and this can be looked at a whole host of ways, for now the wave 2 low into this region is working out well. So again, gold is with a flag situation, essentially. No change in oil. Still looking to the upside. The overall view in this did not see another low for 11 waves. We just got 7 into here, which I marked as Y. So I'm going to stay bullish on this, and I think any type of sideways correction can be bought into overall. Let this resolve, see what happens here. But the view on this hasn't changed. Just an upside move overall for wave Y. How far that'll go, I'm looking above 55 towards the low 60s. So no change on that from last week. Count-wise, we could be looking at a 1, 2, 1, 2, 1, 2, 3 for a very bullish count, but overall, I don't have a count on this right now. It is still, look, frankly, it's still in the region for an X wave. At this stage, I don't think it's going to happen for another move down, but it is still in that region and hasn't had a significant break above here just yet. So I'm holding the bulls in control overall of this market, and any bullish flag will be a chance to enter. Okay, I'm not going to work on yen pairs. Most of the yen pairs, I think euro yen looks like it's due a correction. Dollar yen I made a separate video on. I'm not going to deal with that right now. I'm viewing it overall as bullish for a continued move up, but it may take a number of weeks or months to fully set in. There's nothing to work on right there. Okay, the count in this held. And this is where price action with Elliott Wave comes in handy. The decline that I talked about in the last video was only 3 waves, and as such we had nothing to work with on the downside. Now I'm going to look at this overall as only a correction for wave 4 for the bearish view. Now if we're viewing this as wave 3 done, we could see higher into here for a 38 retracement for wave 4. But for the time being, another typical area is wave 4 of wave 3, which is actually up here. I was thinking this is wave 4 of the last segment. But in any case, I'm looking for this overall to turn lower. To stop rambling on, I'm looking for this lower. This is a corrective pattern in my view, and it's channeling. We have not yet broken this level, but even if we do break it, I am looking for this to turn over. So my view on this hasn't changed. More lows to come towards 123. And next week, the 8 EMA will come in about 12750. So there will be that as resistance as well. I've gone over this many times. Well, this did resolve, and the breakout to the upside upon there happened, as we can all see. Frankly, I don't have much of a view on this market. I don't want to talk about something that I don't have a strong view on. It's a waste of time, and the only point of this is to look for trades, not to ramble about directions. The gap, the French presidential gap in April filled. I cannot work this as bearishly as I'd wanted to on a historical basis. I wanted to work this as a flat and a strong move down. We haven't seen that yet. Are we going to see a more bearish move overall? Well, this is only 3 waves here, in my opinion. So I don't have a short move, move to the downside to work with overall. So I'm going to pass by this market. It seems like to me that the upside is holding quite well, and I would run with that here. And Aussie Canadian, see, the issue with this is that on the monthly, it's looking like it has a good chance to move up here. The stochastics have not reached the 80 line, and the bearish view I was working ended up petering out. And this trend line is now being regained and taken up. So on the lower time frames, I can work a small wedge into here, which may see towards the upper side a larger 3-way move, such as this, and then we get a correction and then something more bullish, possibly. But again, I feel that in this pair there is not much to work with. The down moves that worked out overall in this pair were okay, and US Canadian was very good. But at this stage, I feel there's not much to work with and not much edge. And without an edge, without a trader's edge, there's not much to limit risk and to look for reward with. So I'm going to pass by this market too. And again, this pair, New Zealand Canadian, is still lingering and hanging on here on the trend line. There's not much in this. Is it bear flagging? You can make a case it is. It's not really what I like to look at, frankly, but it's there. So if you're interested in this type of thing, it's there for you. But I think the issue with this is that on a major level, we are looking at a trend line which has not been convincingly broken. And without the convincing break and the flag after that, there's not really much to work with for a trade. So again, I would let this resolve, see what happens, and look for the trade after there's some clearer resolution in this. Euro pound, my recent view, finally getting some clarity on this, of this working as a flat. My view hasn't changed on this since then, and I'm looking at higher in this pair for a bit higher to complete what's ultimately going to turn out, I think, now to be wave 5. So this count I haven't altered. It will ultimately have to come in like this. This has been very difficult for me from here. And overall, I'm passing by this market. Okay, Euro, let's start with Euro New Zealand. Now, Euro New Zealand is open to a B wave high here. It hasn't been confirmed, but it is getting into that area where, or it's starting to act like it's suggesting there's a B wave high in here. So far, the weekly closed within the prior wicks. Now we need to see this turn over next week and to head down for one more correction. So overall, we get a larger 3-wave correction here, and then the bullish trend can resume. So that has not changed. Like I've said before, I do not have a trade to the upside here. I just don't have it. And if I don't see it, I can't take it. I don't have anything to work with for a plan, and I just have to drop it overall. Because to me, this looks corrective into here. So I'm going to work the idea of a B wave high here. And with Euro Australian dollar, we did have the divergence here. So I'm a little bit less confident about this for a correction. Rather, I should say for this, for another correction, I should say, because of the divergence in here. What I would say is that on a lower time frame, this looks corrective, this boxed area here, and it does not suggest a propulsive move to the upside. It suggests that we may see another low come in overall. The odds to the upside were in your favor here. That was the trade region, forex trading, number 4x trading, who I mentioned for the gold-silver ratio. He found this trade and took it to the upside. Now the issue is that this does not look corrective. This looks corrective. It does not look impulsive. And so it may be opening to another move down with the euro. Now euro sentiment overall, traders are very, very bullish on this. So we may see some weakness in the euro in some of these pairs. Now, I want to go to Aussie New Zealand, as I should have mentioned this with Euro New Zealand. Now, my view on Aussie New Zealand hasn't changed, so I'm going to keep this shorter than last week. I can view this a whole bunch of ways. Keep in mind that these are summer months, summer weeks for trading, and summer months and summer weeks are whippy, zigzaggy, sharp, often corrective, often jagged, whippy weeks where traders will get whipped around, stops hit, and then the market will resume. So I want to keep the bigger picture in view here. And the bigger picture remains that there's more of a chance of a Z wave low, another low, than there is for an immediate upside break. I mean, because in this region, first of all, we're just in the middle of a trend. So there's no point suddenly becoming bullish here. The bigger picture is that this whole market is still correcting to the downside. Even if we view this as a 5-wave advance, which I'm preferring, this is still a corrective move, and also this is a 3-wave move, so it's not as if I have a clear 5-wave advance to work with for a correction. So far, I'm looking at them all as threes. Now, how we can view this overall, some traders may want to say, oh, this entire thing is a triangle, and that we then have a very sharp move for A, B, C, D, and E, and a new low. It's possible. It's not how I want to view it because of this impulse here. I'm viewing it differently. It's printed on the chart. Now, there's another way to look at this too, which I rather like, that we may be seeing three waves here for A, and then we see a B wave triangle where it's 3 up for A of the triangle, 3 down for B, C, D, E, and then a move down for wave C overall to a new low, which ties in with the bigger view of a Z wave move, and then the big move up, because I still like the big move up towards 114, 115, 116, and I do think we're going to see that, but I would prefer, and I think the pattern suggests, and the probability favors a move down for Z here. Now, whether you view it, as I just mentioned, of A, triangle for B, and then wave C, or a bigger 3, WXYZ or WXY, that seems to be holding. Now, for a bullish view, if you're going to be bullish here and you want to put this into, you want to explain this in an EWA way, you're going to have to work this as a three-wave advance. So we would have to look at this as an impulse here, a three-wave correction. Then you're looking at a type of A, B, and 5 for C for wave C overall. So it'll be A, B, and then something like 1, 2, 3, 4, 5 for C, and then a turn over. That's ugly and a bit ridiculous, but hey, things happen. And the thing about Elliott Wave is that although it's really useful in all kinds of ways for setting up new trades, for seeing the ends of trades, for managing your risk, and many other ways I can't think of just now, it is also open to a whole range of counts and possibilities, and the possibilities are endless, so I cannot just speculate and speculate about it, because that can go on all day and all night. So that type of bullish idea, it's possible, but let's work with the bigger view and what's been working. And that when I was previously bullish up here in this region, that turned out to just be a three-wave correction. And now the bigger view through these summer months is that the correction is still likely to unfold lower. So I'm going to look for this to turn over next week. Stochastics are still pointing down. So far, on the daily, this is just a three-wave advance. We also have just a three-wave advance here if we take it literally, visually, literally. And we have just a three-wave advance here on the 4-hour. And we just have a three-wave decline here. So threes all over the market. Maybe we'll see a bigger 3 into here and then roll over, but however it unfolds, I want to favor the downside. For me to change my mind, would need to see a break of trend above here. And so we're talking a ways up. So I have nothing to work with at this juncture except a downward view. And I will be looking for setups to the downside. So that's my view here. No, nothing's changed. I'm essentially repeating myself aside from throwing in a possible mini triangle in here. My view hasn't changed over the past number of weeks. It's just because of summer months, it's been really whippy lately. Okay, just a second. I got to see what else, if I missed anything. Yen pairs I'm not covering. Canadian pairs are a bit here or there. I think US Canadian is the one to look for in the Canadians. Or Euro Canadian if you understand it. The other two, not so much. Okay. Bitcoin I covered, not covering the exotics. All right, wheat. Number of ways to look at wheat. I wanted to give the bulls an edge here because the move's been good to the upside, but the move up, it's true, it was corrective. Now, are we going to see this find a low here and a move up and get a corrective move up? It's possible, but you would have to go down to the lower time frames to look for that. And right now, It appears to be channeling, so I can't rule out another low, but I'm going to stay bullish on this overall. If we get the new low, I will be bullish. If we don't get the new low and this manages to turn over and turn bullish on a lower time frame, I will take that as well. As I mentioned, this is looking like 3 overall. And there's not much to work with to the, there's nothing to work with to the upside right now on the daily. Stochastics are crushed. So it's looking like this may be making a new low overall. So right now there's nothing to work with. The stochastics are pointing up, and I was wondering if we're going to see on the lower time frame a low set in and a turnaround here, but right now there's nothing to work with to the upside. Now, another market that I was bullish on has turned over in the past 5 days, and what I'm looking at in soybeans is that it's still corrective overall from this 5-wave advance. So in soybeans, I would like to see one more low now that we've rolled over. And if we get that, then I would stay bullish on this. I'm staying bullish on this market overall. Now what I want to say about this actually, a case can be made here for a 5-wave advance on the daily. So I don't have anything to work with right now on the buy side, but a case can be made. So as long as 905 holds, there is a case for a bullish move. Viewing this as the first impulse. Alternatively, if we don't see a corrective manner in here, one more low, and I would still hold this bullish so long as this holds. So the lower time frames will have to be used on here on the daily, and we'll have to see this turn into a corrective channeling move. Right now it's not looking good for that, but it's there. So you're aware this could be interpreted as 5 up. And ultimately, if it fails, we have the bullish case here as well. So there are multiple bullish views on soybeans. The contrarian level on wheat has come way down. It was up at 55 or so. It's come down a lot. Soybeans are still kind of here or there. Other markets, I'm holding, well, on sugar I was looking at this as a 5-wave move, but I had rather mixed feelings about this, honestly. It could be, but I could also view this as an ABC correction in here. So that's why I haven't brought up sugar, because I'm in 2 minds about it. I don't want to just ramble on about things I'm in 2 minds about, as the whole point is to look for certain trades here. And at this stage, bonds look like they are likely to move higher. My view overall is that we've seen a major 5-wave decline in the 30-year T-bond, and that this is a corrective swing here. Oh, I gotta go over Tesla. I almost forgot. I'll go over Tesla next. We're looking at a 3-wave swing here, corrective swing. And at this level, looking at this as a channeling move, so this is not a market I look at daily. It's like a weekly thing. So if we see a further 3-wave correction here, it will set up, I would say that because of the channeling on the daily, the bears should be in control of this market. Now I can speculate, it's only speculation, that we will see a larger 3-wave correction, even if we get a new low and then turn over. That might not happen. It could simply be and then down. The reason I think it's going to be a bigger correction is only because of the time of this. But the key point is that we've had, by my reading, 5 waves down in ZB. And as such, bonds are bearish here. So that's my view on ZB. And finally, Tesla. Tesla's been interesting. My bigger view on Tesla has been working. My short-term view on Tesla did not work. I presented this view on Twitter about 5 weeks ago and in one of these videos that we're looking for a sharp wave 4 for wave 4 of wave 3. Sorry. And that would bring in wave 3 on a new high. And that view has worked out. But what I mentioned, I think in last week's video, is that at this juncture before, as it was happening, it would be better to look for a downward move here. Partly because the price pattern looked kind of corrective, and partly because the idea was that we would see a bigger 3-wave move like this. Now, it's still possible, but it's not looking likely, partly because this is a gap up. You see the gap here? That is a bullish gap. I cannot, well, I can, but I don't like to view this as A, B, and C with a gap and then down. Because usually for the C leg, you get a move up and then a move down after that following the correction. But because of the gap here, the gap suggests a bullish reversal to a new high. So on the weekly, the bigger count held without the new low. And that means that if we do see a high, this whole swing will have to be viewed as corrective, as 3 on its own, without a new low. But this is the good thing about Elliott Wave. The count was put in before the move happened, and I mentioned a likely sharp move down because this was time consuming, so I could work an idea that a wave 4 would be corrective, pardon me, a move down would be corrective and would be more likely be sharp. So that's the benefit of Elliott Wave. Being able to, for example, hold on to a long move. Anyone who was long in this region upwards did not have to panic to get out of the trade, because the plan, according to EW, was for a correction and now a move higher. And I think the bulls at this stage have it, and I would favor that upside because of the gap. So there you go. That's what I see about Tesla, and so far it's been working fine. And I don't look at Facebook, I don't look at Amazon, I don't look at Netflix, I don't look at Google. So the whole FANG group is not one I've been watching at all. I just like the view on Tesla because a mate of mine on Twitter has been really getting off on selling it to the short side and did really well on these down moves. And but so far, that's the good thing about trading. If you can switch sides and accept that the market's changing, you can make money both ways. So I'll leave it there, and I will look for, so for the coming week, I'm going to look at Euro, Pound, Aussie, and New Zealand for down moves, corrective down moves, maybe something more bearish in cable, but corrective moves to the downside. Still going to watch for upside moves in gold and silver. And I'm going to look for downside moves in Aussie, New Zealand, and see if this similar thing happens in Euro, New Zealand as well. If you overlay Euro, New Zealand and Aussie, New Zealand, there's a kind of match going on there. Not perfect, but quite useful as well. All right, have a good week. Bye-bye.